Assalamu Alaikum everyone, welcome back to another video. In this one we are looking at Adobe, but before we look at Adobe and analyze the stock and find out whether this company is overvalued, undervalued or fair valued at the moment, we are gonna talk about the stock market. So just last week, just the week that basically today's Friday, so just the week that's finishing today, this is what's been happening in the market. There's a lot of red. Apart from Pfizer and a couple of other companies, okay, Apple and Moderna and so on, majority of the stocks are down. They're down about 4%, 5%. CRM or Salesforce is down almost 10%. This is a company that I own. I really do like it. Mastercard is down almost 6%, 2.5% for Visa. So every sector you look at and every stock that you look at is down. A lot of it is because of the fear of what is going on at the moment with coronavirus and so on, and the new variant that just came up and what, okay. But what's happened also is if you look at just this month, you can see majority of the companies are, majority of the companies are down, but not a lot. Okay, like companies like PayPal or whatever, they're down quite a bit. And then when you look at just for the 3 months, you see a lot of green. And then when you see in the last 6 months, it even gets more greener. If you look at the companies like Home Depot and Lowe's and so on, that are up almost at 30-something%. So I thought, let's just have a look at the overall, how is, the overall market is doing in terms of what's happened in the last few days, right? And obviously look at in the long term. So if we look at the last 5 days, the S&P 500 or the SPY ETF, which tracks the S&P 500, is only down 1%. If we look at just this month, is 1.58%. If we look at last 6 months, is only down, basically it's up 9%, 9.2%. For the year to date, is 24% up. So that's really good. Then you look at the Dow Jones ETF, and when you look at this for the just last 5 days, is down about 2%, 4% for the month, 0.18 up for the 6 months, and year to date is about 14.5, almost 15% up. Then when we look at the QQQ, which tracks the high-tech Nasdaq companies, for the last 5 days, it's down about 1.5%. In the last month is just down 0.83%, and then for the last 6 months about 18% up, and then year to date 26% up. So when you watch the news and you see the news and it doesn't reflect, when you see all these reds that's been happening in the last couple of days or just last week, and you see this, everyone starts panicking, everyone starts selling their shares. But what you haven't taken into consideration is the fact that the stock markets generally, since the beginning of this year, is up about 26%. So the broader markets, the S&P 500, when you look at the year to date for Dow Jones, is almost 15% up. And then when you look at the Nasdaq, it's 26% up. So generally, everything is up. But because everything is down just the last couple of days, everyone is scared. Yes, I understand the new variant might be just scary, but that's what they said when Delta came around. Okay, and this is one of the things that you watch the stock market and you see it, your portfolio going down, and everyone start panicking. And instead of panicking, I've been buying a lot more, and I've got a video coming up just next couple of days just to kind of go through, because I have made some change to the portfolio and I've added quite a bit of money. Okay. So I'm going to share that with you guys, and I want to show you what I've added and what I've done to the basically to my portfolio in the last 5 days. So since the beginning of the week, it's been up and down every single day, but I've been buying more and more every single day. And this is why I just want to, when I started this portfolio, when I started this actual YouTube channel, I thought, you know what, let me share my experience with everybody else. And I'm not hiding anything. I share with you every single week, whether it's up or down. I tell you exactly what I'm buying, what I'm selling, and so on. And I still focus on, buying companies that are Sharia compliant and so on. And when they're not Sharia compliant, I get rid of them. Okay. And it's been really that simple for me since I started this journey, and I hope you enjoy this. And if you do enjoy it, please just like the videos, and tell your family and friends, and subscribe it, and just have the notifications open, so next time I release a video, at least you get to see it, inshallah. Right, so let's now have a look at Adobe. Adobe is one of those companies that have been around for a while. They've got great products. I'm sure we all used it. In the company that I work for, we use a lot. So from Photoshop, for Adobe Premiere to Illustrator and so on, we do use it. After Effects and InDesign and so on. They have products that stick. We use Dreamweaver quite a bit as well. So they have a products that stick. That means basically once you're in that platform, in their environment, it's very difficult to move to another company. There's not that many companies out there that can compete with Adobe on the package that they have. So the Creative Cloud and apps is basically what every company purchases, and they cost quite a bit of money. Now, it's not like the back in the days where they had to actually package everything into a CD and sell it, basically put it in PC World and so on. You go to get it. Right now, you can just click this buy thing and just download the whole app. Just download the Creative Cloud apps, and then basically you've got subscription. And every month you pay subscription. And I love the subscription model businesses. They are absolutely brilliant, because in the end of the day, the overhead is not a lot. All they have to do is create the app applications, upload it to their cloud, we download it from there, and then they make their sales, and then they basically do the updates and so on every single year. And it's a bit easy business model, and I absolutely love it. And they are now trying to diversify their portfolio rather than just focusing on the application side of it. They've got cloud and other things going on as well. So we're going to look at today what the company is all about, and then hopefully see whether it's valued, undervalued, overvalued, or fair valued. Right, so the first thing we're going to look at their market cap. So currently trading $671 per share, and $319 billion market cap. In terms of the beta, is 1, and then you've got 55 PE and 12 EPS, which is earnings per share. They don't pay any dividends at the moment, and when we look at their financials, you will see how amazing this business is. From 2018, they had $9 billion of total revenue. 2015, they've got $15 billion. That's $6 billion in about 4 years. Now, when you look at their cost of their revenue and the gross profit, that's where I absolutely love this company. Look at $13 billion from the 12th day. They've only spent $1.78 billion to make $15 billion. Then when we take out some, expenses, what's left of everything is $5.8 billion that goes into the pocket of that company. Then when we look at their balance sheet to see if the company has actually got any debt and so on, in the last 3 years, what you can see, if I go back to here, current liabilities, you can see from $4.8 billion to now $8 billion of current liabilities. So this is money they can liquidate in the next 12 months to pay off current liabilities. So they have more assets than their liabilities, so the company is safe at least for the next 12 months. And then the other thing we look at is when it comes to this type of companies is to see, because they don't pay any dividend. So their ordinary shares numbers from 487 to 482 to now 479. So you can see it's decreasing. That means every share you own of this company is now worth more because they're buying back their own shares. Now, one thing I don't like is if companies have a higher stock value, I don't like when they buy back their shares. But this company, if it's undervalued and they're buying their company back, that's really a good sign of a great company. But nevertheless, it's going the right direction, and it's very good to see that. Now, the other thing we're going to look at their cash flow. This is money they can reinvest in coming up with new products. So all these products, how they can change it, they can innovate it, they can add more to it by using this $6.6 billion that you've got in the bank right now. Now, couple of more things. So the analysts right now, what they're predicting for this company for the next couple of years. So revenue estimates on 2021, they're expecting the sales growth of 22.5%. And then the following year, about 15%. So that's double digits. That's brilliant. When we then look at their current growth estimates, so, okay, for current year, it's about 23.6%. The next year, 14%, and then the next 5 years, they saying you can expect about 18.28% growth for each year per annum, and that's brilliant. Now, in terms of valuation, then you can see strong buy and buy. So everything in here now, majority of the analysts that have looked at this company have said, on basically according to Yahoo's Finance, are saying is heading to strong buy. So you now have about 25 out of the 31 saying is either buy or strong buy. They expect the average price to be $715. Currently is $671 per share. Height of $820 per share. Morningstar, which is normally quite reliable in terms of they're very strict when it comes to their valuations, is saying this company should be fair valued of $610 per share, but last close was $671. So therefore, they're saying is range with what's considered basically a fairly valued at the moment. So it's not overvalued, it's not undervalued, it's more or less fair valued, and it has a wide mode, meaning there is not that much competition out there, so they have the competitive advantage over their competitors basically. When we look at the tip rank, they have $725 share. That's upside of about 8%. Now, when you look at how many analysts are actually looking at this, is absolutely crazy. Okay, you've got all of these analysts that are looking at, a majority of them are saying it's a buy, and there's an upside of at least 2%, 5%, 10%, 19, 9%, 13%, and some which are obviously, even though it's a buy, they're saying at least is a downside. Basically, they're expecting about 620. And 650, 650, 570, and then so on. So these are the bearish guys, the guys that who think it should come down a little bit, and the valuation is a little bit strong. But it's a strong buy nevertheless. Okay, so everyone's kind of agreed. 18 have said is a strong buy. When we look at this is the other thing. I've looked at the Simply Wall Street, and I was expecting this company to say is overvalued, but they said it's 13, almost 14% undervalued. So they expect the price to be 780 per share instead of 671 where it is currently. And that is really good. I mean, can you believe, like right now, the stock is trading 671, and these guys are saying 700 plus. These guys are saying 700 plus. Same thing goes for Yahoo Finance. But the only company, like I said, these guys are very reliable in terms of, and I do like because it gives you marginal safety. So if they're saying 600, if you see a drop in this company, even if right now I wouldn't even hesitate buying, I wouldn't even mind buying it, to be honest with you, but maybe it would be better to see it maybe around 610 or between 610 and 650. If it goes in between there, then I'm a buyer, definitely. No doubt. It's been on my literally watch list for a long time. I think I've now left it too late, but it's never too late. So I really like the business model. I like the company. I like in terms of this SaaS model. Okay, it's really good because it sticks, and the fact that they're coming out with the new products every single year, they're making their products even better. They're reaching out to a lot more customers, so they have so much going on. And the still company is more or less, it's got great potential in terms of growth wise. Even though it's a huge company, it's been around for a while, it still has a massive growth ahead, as well as the revenue is growing. So imagine 22% this year, and the next year at least a 15.3%. Again, remember, these are what the analysts are predicting, so things can change. And that's why I like to have a little bit of margin of safety, just in case they don't meet that and something else happens or whatever the case might be. So if it hits about 650, between 610 and 650, then I think I'm going to look into this company. Right now, the pre-market, so today is the Friday, so markets are opening very soon. And once that opens, it's probably down about 2%. So we'll see what happens. But in the end of the day, it's a great company. I really like the business model. So there's the only concern I have in terms of valuations is this very high PE. And even when you look at the statistics, you can see in terms of the PEG ratio, it's not a lot. But then when you look at the sales, price to sales and price to book, that's very high. And then when you look at the marginal profit margin, you realize, you know what, this is the reason why people are buying this company, even in these valuations, because of that profit margin. That's very high, and that's normal for tech companies. Okay, operating margins of 36%, and then you've got return on equity of about 14%, and return on so it's asset of 12 to 14%, and return on equity of 44.7%. So it's a great company. It has massive potential ahead of itself, and I would love if this company was paying some sort of a dividend. It's getting to that stage where it's becoming a mature company, so sooner or later they're gonna have to start paying. The fact that they're buying back their shares, that's enough for me. It's a great company. It's definitely on my watch list. Like I said, in terms of tech companies that I want to purchase next, is definitely number one. So I will look into it in the next couple of weeks and see if there's a pullback in December, you know, the next few weeks, then hopefully I can purchase a couple of shares of this company. Right, that's my, like I've always said, you know, this is my own analysis. I'm just predicting things. I'm looking at different websites. I'm using different analysts and so on. I'm not a financial advisor. I'm just kind of giving you an idea of some of the companies out there that are Sharia compliant, and then just give you a heads up, just in case you were interested in Adobe, in case you own it. In case if you own it, keep it. Honestly, I'm not, like I said, I'm not a financial advisor. I'm not giving you advice. But if you own it, definitely keep it, because it's actually a great company. If you don't own it, maybe look into it. And that's exactly what I'm doing, inshallah, in the next few weeks. Right, like I've always said to you, I've shared with you everything that I actually do in this stock market thing. And so if you enjoy that, please like the video. It helps. The more likes the video gets, the more people get to see it, and the more people that we can help, inshallah, collectively. I've got a couple of more videos coming up. I'm doing portfolio update. I've got 5 new stocks that I've actually researched last night that I'm going to share with you, that are all undervalued, that are great companies. I've got, you know, another video that I've also planned for this weekend, inshallah, that is based on high growth companies. So yeah, there's a lot of good things coming up, inshallah. Just all I basically need from you is just a like and subscribe, and let me know if you have any questions. If you lasted this long, thank you so much for watching. Take care. Assalamu Alaikum.